All right. Hello and good morning, everyone. Thank you for joining us. This morning, we'll be discussing the Seattle Commuter Benefits Ordinance. Please feel free to send in any questions or comments you have in the chat box over here on the right of your screen, and our hosts will answer as many of those questions as they can throughout the webinar and in the Q&A segment at the end of the webinar. I'm Morgan Huther, Marketing Manager at the Washington Hospitality Association, and it is my pleasure to introduce our two speakers today. We've got Brad Keim, SVP of Revenue at Alice, and Anna Boone, Local Government Affairs Senior Manager at the Washington Hospitality Association. With that, I'll turn it over to you two.
Well, thank you, Morgan. And this is Brad Keim. I am Senior Vice President of Revenue at Alice, as she mentioned, and we're excited to be here today. And the first, let me walk you through the agenda of what we plan to speak about on this webinar. And again, hoping that it's going to be interactive, as Morgan mentioned, in terms of questions that you might have about the benefit ordinance and how to maintain and become in compliance with it. So today's agenda is going to be an overview of the Commuter Benefits Ordinance that Anna will lead, what HR and business owners need to know in any organization in Seattle, how to successfully implement and manage a commuter benefits program. How can you turn a regulation and an ordinance into an advantage for you as an employer, and then we'll open it up at the end for Q&A. And so with that, I will turn it over to my colleague here and let Anna take it away.
Thank you, Brad, and good morning, everyone. Again, I'm Anna Boone, Senior Manager of Local Government Affairs in Seattle for the Washington Hospitality Association. I'm going to provide an overview of the ordinance and actually got to engage with the Seattle City Council as they designed this ordinance last year. So we'll start with what is the Commuter Benefits Ordinance. So beginning on January 1st, 2020, businesses with 20 or more employees will be required to offer their employees the opportunity to make a monthly pre-tax payroll deduction for transit or van pool expenses. Businesses may also choose to meet their obligation under the ordinance by subsidizing all or part of the purchase price of the transit pass. I will note that the ordinance applies to businesses who employ at least 20 employees worldwide. That business does not necessarily need to be Seattle-based, but will be included if it meets that threshold of 20 employees worldwide and then have employees who work a minimum amount of hours in Seattle per week, which we will talk about a little bit on the next slide. The city's goal with passing this ordinance was to encourage mass transit use over single occupancy vehicles to reduce traffic congestion and carbon emissions. In terms of enforcement, the Seattle Office of Labor Standards is tasked with enforcement. While the law goes into effect on January 1st, 2020, there is an additional year before OLS will begin taking enforcement action. So that will begin on January 1st, 2021, really with the goal of allowing employers to get into voluntary compliance in the interim. In terms of benefits, I believe Brad will expand on this later this morning, but there are benefits to both employees and employers in terms of providing pre-tax deductions for commuting expenses. That includes cost savings of up to 40% of commuting costs for employees. And then employers also see cost savings on their payroll tax. So we can really view this policy as a win-win for businesses and employees. And then there are several types of commuting types that are eligible under the federal program, which Brad will speak to, but are certainly required under what it means to offer a pre-tax payroll deduction for transit or van pool in the Seattle ordinance. And those include bus, ferry, water taxi, commuter train, light rail, streetcar, so any of the transit types here in Seattle, as well as van pool. And just to note, the IRS the Internal Revenue Code does allow pre-tax deductions for parking expenses. This ordinance does not require a business to offer those pre-tax deductions for parking. So that's one area where we see a little bit of difference. Moving on to our next slide here, under what business owners and HR really need to know as you think about meeting the requirements of the ordinance. This benefit must be offered to all employees who work at least 10 hours per week, including seasonal workers. The ordinance suggests that you look at the number of hours the employee worked in the previous month to determine whether or not they meet that threshold. So again, if you have an employee who worked an average of 10 hours per week in the previous month and are an employer with 20 or more employees worldwide, then you do need to offer this benefit to your employees. Employers must offer that pre-tax deduction within 60 days of the employee beginning employment. And then once the employee opts into that pre-tax deduction, you must provide that deduction within 30 calendar days. So there are some time parameters set in the ordinance in Seattle. And again, just at a high level, the ordinance requires that employers either allow employees to make that pre-tax deduction up to the full amount allowed by federal law, or subsidize all or part of the purchase price of a transit pass. We have received a lot of questions and have the same questions on what does it mean to subsidize, at what level of subsidy would make an employer compliant with this ordinance. Rulemaking that is currently underway with the Office of Labor Standards will determine that level of employer subsidy necessary to satisfy the ordinance requirement. Again, that's if you are not offering the pre-tax deduction. We are expecting draft rules any day, which will then trigger a 2-week public comment before those rules are final. So we will have more information that will be available on the Washington Hospitality Association website once those rules are finalized by the Office of Labor Standards. Just a quick overview on compliance. So as I mentioned earlier, after January 1st, 2021, the Office of Labor Standards will accept complaints about alleged violations of the ordinance. The ordinance was designed with voluntary compliance in mind. That gives OLS the option of providing a business with a 90-day voluntary cure period, during which an employer has an opportunity to achieve compliance rather than being penalized. And in that event, OLS would not pursue further investigation. As of January 1st of this coming year, 2020, covered employers will need to make sure that they are displaying a poster that gives notice of the employee's rights under this ordinance. And the Office of Labor Standards expects to have that poster available to employers late this year, in late 2019. That will very likely just be folded into the labor standards posters that you already have posted for your employees with notice of their rights under the additional Seattle labor standards laws. And then I will mention kind of the last thing on this slide, if you do already have a commuter benefits program where you are offering a subsidy of commuting costs for employees, there are options, as Brad will speak to combine that with the pre-tax deductions where you see even more cost savings for both your employees and your business. So a lot of benefits that you will hear about this morning. So with that, I believe we have a little poll for you. Does your business fully understand the ordinance and what is required to comply? If you are answering B or C, no or not sure, we really encourage you to enter your questions into the chat so we can make sure to address those so that you leave this webinar with a full understanding of your new requirements. And with that, I can pass it back over to Brad.
Great. And thank you so much for all of that. It's a lot of information and to digest a little bit, especially if you're new to this type of a benefit or haven't offered it in the past. But again, I think it makes a lot of sense, and you're seeing we're seeing trending a lot of cities and states moving into this similar sort of requirement. So Seattle is the fourth city in the country to have something like this. And we're seeing, again, the state of New Jersey is going live with something like this as of March 1st. So we're starting to see states trending on this type of requirement on business owners. So we also have another poll question here, just a yes or no in terms of does your business already provide commuter benefits to your employees, whether that's through the federal program or whether that is through some subsidy or some combination. So just a yes or no would be great.
And Brad, let's give folks, I see a couple people still kind of considering here, trying to answer that first question. Right. So I want you guys to really take a moment and decide if your business does understand. And then we'll wrap that poll up, and then I'll leave that second one running for a little while so that everybody in the chat room has a chance to kind of answer and feel really good about their response and still listen. And it looks like we've got everybody's response in, so we'll swap on over to the second poll. All right, that one. I see answers rolling in really quickly on that one. Thank you so much.
Yes or no's are usually easy. Yeah, that's great. That's great. So, all right. We'll just talk about what it means about implementing and managing a program. And so talk about a couple of things here. If you don't have a program currently in place, there are options. One would be to manage the pre-tax commuter benefits manually in-house. That is an option that you would have as an employer. Or the other is to use a third-party administrator that would, be able to provide you with these commuter benefit models. There are different ways. There's obviously some costs associated with that. There are several providers that will charge a business on a per employee per month basis. So we have that in the category of traditional here. And then the company I work for, Alice, we actually don't charge a per employee per month, use technology a little bit more to our advantage to automate some things. And so we would get paid by sharing in some payroll cost savings of the employer that are created through these programs. But we'll talk a little bit more about that here in a bit. So let's say that you would want to contemplate as an employer managing this manually. Here are the specific requirements that you would need to do in order to manage this manually. So you'd need to implement a plan. You would have to prepare enrollment materials for your employees, and you would have to contact the payroll company about how you would collect pre-tax deductions for transits. So depending on who your payroll provider is, most of them will support that functionality, if not all, because this is a pretty common program across the country. But that would be something that you would need to do as an employer. You will also need to keep records around the document compliance with the ordinance, including written documentation of that you as an employer have offered this pre-tax deduction to your individual employees. So that would be for each and every employee that would qualify based on what Anna said in terms of that 10 hours per week and probably in the previous month, as well as then all net new employees that you're bringing on that you would expect to be over that work threshold. Yes, again, 60 days, the first 60 days you need to essentially implement this program or make that offer. and then you have to keep records for 3 years, including records of offering the pre-tax deduction to any employee, again, who's worked more than that average of 10 hours per week. So if they actually, you didn't think they were going to, they ended up doing that, you need to also, make sure that you can go back and offer that. But you have to keep these records for up to 3 years if you would choose to manage and implement this type of a program in-house at your own restaurant or hotel property. What are the advantages for employers? I think Anna touched on this a little bit before. So the benefit is certainly larger to an employee. So an employee, when they save on a pre-tax basis, if they're using the pre-tax methodology around commuter benefits, they do not pay any federal income tax. They are not going to pay any state income tax, and they are also going to not pay the employee portion of the payroll taxes related to those dollars. So I think in the earlier slide, we cited that could be up to 40%, depending on what municipality you live in the state of Washington and what tax bracket you are in from a federal purpose. So it's a pretty significant savings to the individual employee. For the employer, there's also a savings. So every dollar that is saved on a pre-tax basis, the employer does also not have to pay the FICA taxes, the payroll taxes associated with those dollars that are saved. So here, for every $100 that an employee would save pre-tax, the employer will save at least that 7.65%, which is the FICA tax, or close to $8 for every $100 that the employee would save. So important to know that there is a cost savings to employers for being able to provide these types of benefits as well. Depending on what the utilization is and what somebody would pay in a traditional model on a per employee per month basis, pre-tax benefits could be cost neutral, potentially cost savings, depending on how people participate and the more people use. In terms of to that employer, the less people participate, that per employee per month fixed fee might be greater and might be an added cost to an employer. But as a member benefit here, in terms of our partnership that Alice has with the Washington Hospitality Association, there is no cost associated with our program for implementing these, and it completely automates the pre-tax benefits, including all of the commuter aspects of this, with no administration and no maintenance on behalf of that employer. Alice is a third-party administrator and is able to comply and check the box within the regulation by doing all of the things necessary for compliance. Here's just a savings example, just to understand on the pre-tax, just to try to create a simple example here for how to think about this. Meet Jane. Jane's single. Jane does not have children. Jane rents an apartment and makes about $50,000 a year with no other income sources. So we're going to kind of keep this simple. Jane pays $12,064 a year in federal income and FICA taxes, and she also buys an Orca Pass for $99 a month. So every month she's doing that. So that's $1,188 in commuting and transit expenses that she would have. So Jane's employer here would pay $3,825 in on that $50,000 in FICA taxes, and so but if with commuter benefits being set up, Jane herself is going to save $388 in just federal income and FICA taxes on that. So that's great for Jane. So she's going to get a nice cost savings out of that, and then you as an employer would save $91 for her being able to use this and setting this up on a pre-tax basis. So I think, as we've mentioned before, it truly is a win-win as it relates to how these programs are structured, and how we can provide this benefit in particular through the Washington Hospitality Association. The other thing that I will note here and want to at least call to your attention, I think Anna talked about, if for employers who are providing subsidies, whether that's all or part of a current, another way to comply with the ordinance is to provide that subsidy. At the same time, that is a more expensive solution for the employer as well as the employee. So that subsidy that the employer provides to that employee is taxable to the employee as income, so that if you're going to provide that $99 in this example and the ORCA pass, that would be taxable to Jane as normal regular income for her. So she would have increased, she wouldn't get the entire $99. She would have to pay federal income taxes on that. In addition, with tax law changes that happened in 2018 at the federal level, when an employer now pays a subsidy for commuting and transit expenses for employees, those are also not tax deductible any longer as we sit here in 2019 and going forward. So the employer also is out the dollars to pay for Jane the $99, but they're also not able to deduct that $99 when they go to file their income taxes. So it becomes a pretty expensive benefit. I know a variety of employers have already done that, and it's always been very generous. It's great. They can certainly continue to do that. It has some additional burden to it, not only to the employee, but now to the employer. The employer used to be able to deduct those expenses prior to 2018 from their federal income taxes. But it is a way to comply with the law. It just has a more expensive consequence to the business owner as a way to comply. Offering the federal program here provides definitely more of a win-win, not only to the employee, it's not taxable, but it also is saves the employer some dollars. So I know we've covered quite a few things, and I'm happy to open it up at this point. Anna and I are ready, willing, and able to take all of your questions.
All right. So I don't see anything in the box. The wonderfully engaged audience when it comes to polls, but I will give you all an opportunity to formulate your questions before you post them in the chat or Q&A boxes. And if you think of something later in the chat box there's Brad's email address as well as Anna's, so you can reach out to those two folks if other questions come up well after our webinar is complete. So we'll give everybody about another minute or so to think about any questions that they have, and then we'll answer them if any come up. Otherwise, the recording for this webinar will be available about 24 hours after we conclude today, and you can rewatch it as much as you like, and it will also be shareable if you know any other business owners, restaurant owners in Seattle who really need this information. All right, quiet bunch. Okay, any closing thoughts, Brad and Anna?
No, I think the intent of any of these laws is great, to reduce congestion and emissions. Certainly great. This is a way to turn something that becomes kind of regulatorily driven, but actually you can turn it into an asset with them, again, by employers offering these types of programs to their employees. If somebody isn't doing it that way, certainly an advantage in the marketplace, and we would be happy here at Alice we're thrilled about our partnership with the Washington Hospitality Association, and happy to work with anyone in the Seattle area. We're fortunate to have quite a few Seattle customers already, but looking forward to expanding that here as this new law goes into effect.
Yeah, and my comments really echo Brad's, that we certainly know that, in the city of Seattle specifically, there are a lot of regulations that carry an administrative burden. We are excited that this one also provides cost savings opportunities, and I think this partnership between the Washington Hospitality Association and Alice is fantastic in that we have a solution for that administrative burden by working with a third-party benefits administrator like Alice. And I will say, I believe we have some Seattle operators on the webinar right now, but I've spoken to members in Seattle who have already implemented this program for their employees in partnership with Alice and have had really positive experiences, really positive responses from employees. So this should certainly be viewed as an employee benefit as well.
We do have one question that popped into the chat that I would love to see. Maybe, Anna, if you've got any notes on this. Have you heard from any of the companies who are already using commuter benefits and in any aspect that already have it implemented, and what is their feedback on it?
Yeah, and that's kind of what I touched on. So we certainly have members who have been offering subsidies and have some members, and I've heard, more so since we have been working on this ordinance and sharing information with members, that there have been a number of members here locally who have partnered with Alice to offer the pre-tax deductions to employees. And again, the feedback has been really positive that, once it's implemented on the back end, Brad, correct me if I say anything wrong, but once it's implemented, it's really seamless. It gives a lot of control to the employees to actually select which transit purchases or transportation spends were for work-related purposes, and is very seamless on behalf of the employer and integrates fully with the payroll processing systems. But again, is something that employees and, as you sell it to your employees, can really see as an added benefit while complying with this ordinance. So largely heard positive things. I think it's, I think where we hear people sweating it a little bit is just, figuring out that initial administrative part, whether it's who to partner with or whether or not to do it in-house. And then once something is implemented, the results have been very positive, as I've seen.
Yeah, and I think we have seen on our side great participation from the employees in particular in Seattle. So we see anywhere from a 30 to 70% engagement rate of people signing up, taking advantage of this through the pre-tax side of it. So, I think a pretty good engagement and enrollment rate in something that they haven't participated in the past. But so we view that as a success on our part of being able to get these out to everybody and hopefully encouraging people to participate, because they're just going to save dollars by being able to do it.
Mm-hmm. Excellent. Well, seeing no more questions in the chat box, I again want to point out you can reach out to Brad or Anna. That's Brad's KIME at thisisalice.com and Anna at annab@wahospitality.org. Thank you all so much for joining us today. I want to thank Brad and Anna so much for walking us through all of this material, and we hope that you have a wonderful day.